Hey everyone, it's Rob Stanley with the Ecom Wiz podcast. And today my special guest is Don Henig. He's co-founder of AccrueMe. Hi Don, thanks for being on the podcast.
Thanks, Robbie. I'm looking forward to it.
So we got something really unique here, and I'm going to use that word a couple times in this podcast because we're going to talk about a unique way to source capital for Amazon sellers looking to grow their business. Now, there is a lot of companies out there, Don, that are basically offering money to Amazon sellers to help them with their company, but you guys have an entirely different approach on how you help the sellers out. And we're going to dive right into it. And I'd like you to start explaining it. And everybody, you need to listen carefully because Don's going to explain this on how this works and how different this is. So go ahead, Don.
All right. Well, thanks, Robbie. So, the first thing I'm going to say, though, is that in explaining it, the biggest problem I run into is that people keep thinking about a loan and trying to compare it to a loan. And they might ask me, well, what's your interest rate? I get that question all the time. And it's zero. We don't have an interest rate, which, sometimes snaps people out of it and says, man, this is different. So basically what we're doing is we're providing more capital to Amazon sellers. So we'll double the capital that they have in the business, which is more than I think any lender would do. And what's very unique about it is that we don't take we don't require any monthly payments, and we don't take any permanent ownership. And we simply earn a percentage of profits for as long as they keep us in. And they may want to use us for 6 months or 12 months or 2 years, and just to grow the business nice and large. And a lot of people are looking to sell their business at that point. And we get none of that benefit. We just get our money back and our accrued profits. And they can pay that anytime they want.
Yeah. So why don't you also explain, what are you guys vesting into? We most of the companies that we're talking about that do charge the interest and everything, they're kind of just investing in the company in whole. They're looking at the books, looking at, their P&L statements to kind of see what are they doing. And why don't you explain a little more detail what you guys are specifically investing in and what you're looking for?
I'd say most of the others, truthfully, are looking more at the revenue because most of them are getting paid off of that revenue. And what we're looking for and what we're looking at and analyzing is the pool of business that this company is in. So we look at their inventory, we look at how it's sold, and we project out how it will sell in the future. And we did our own algorithms. We built our own system to do that, all integrated, obviously, with Amazon. And so really that's what we're looking at. We're not looking for companies that are looking to, maintain. We're looking for companies that are looking to grow. They're profitable. And if they had more capital, they could really blow it out. And, anybody that's saying, man, if I only had more capital, I could do so much more, then there's no better partner than us. And we'll come in, we'll give them the money to do it, and we'll continue to give them the money to do it. And they don't have to make the monthly payments. But I will tell you what I've noticed, all right, what we found, and we didn't know this going in, is that Q3, Q4, nobody's making a payment. They're all taking our profits and their profits, and they're putting it back in the business as fast as they can. Come the end of Q1 and Q2, we're finding most of them are, pretty flush with cash. They don't need more inventory at this time. So they have the money. So then they're sending us chunks of money, and they're paying us down. So that ends up making our profit percentage lower for the next month and the next month and the next month. It's just smart business. Doesn't take long for people to figure it out.
All right. So Don, I know everybody's listening and this is what they're waiting for. What's the catch, Don? What's the catch? And then also, explain to everybody how you guys do get paid. How do you make money off of this? And because I know they're all asking it, and let's just get right to it so everybody understands it better.
Yeah. It's funny. I get that. And I also hear it sounds too good to be true. And early on, I had a client that we were talking to, and really good seller in Chicago, and 100% in. He checked me out. Turns out we had a mutual friend, which I didn't know, which was great. And then at the last minute, his accountant said to him, if it sounds too good to be true, it probably is. So he walked away. And I'm like, how do you overcome that? So what we did was we started building PowerPoints and overcoming that objection because it's not too good to be true. It's just different. There is no catch. So, I think if I'm going to give you how we get paid, because if there's a catch, it's how we get paid. And we've already talked about it. It's a percentage of profits. So let me give you how it works, with details so you understand it and everybody understands it. And again, there is no catch.
You know what? Hold on, Don. I'm gonna set up a scenario for you, and you can, because I want you to walk us all the way through it.
Okay.
So I'm a seller. Let's say I'm selling sporting goods. I'm doing, 10,000 a month. So probably about, a little over $1 million a year. And it's like, okay, let's say I've got about 20-30%, grow or net revenue by the time I'm done with all my everything. So, I'm making pretty decent money, but I'm like, man, if I could just get in more product at the end, maybe it's in the year. I need more product in the middle of the year to get ready for Christmas. Mm-hmm. What's the steps I go to? I come to you guys. Do I give you all my financials? Let's go right from like the very start. I contact you, and then what happens?
We ask you a few questions, and we come up with a proposal, a basic proposal, that if everything you're telling us is true, here's how much money we'll give you. All right, we'll invest in your business. We don't look for financials. We don't look for credit report or any of that. Then what if you say that sounds good to me? Then give us access to your system, right? To your Seller Central account, so that we can see and pull down all of your inventory and see how it's performed. And we take about a day or two with that. It might take a few hours, but I like to give myself a little extra leeway there, a day or two. And now we can come back to you and say, all right, you have a couple of dogs here, and that are not selling, haven't sold in months. We don't really want to get behind those. And everybody that we've said this to, they all know them instantly. There's no secret there. But the rest of your business, we really like. And so, the rest of your business, I'm just going to use the numbers, $100,000 of money that was invested in inventory, just to keep it simple. Yep. And you can multiply it easily, right? So you have $100,000, and this $20,000 of inventory, we're not going to count. So that $20,000 of inventory, you get 100% of the profit on whenever it sells. We get nothing. So the other part of it, we'll give you $100,000 to match your 100,000. And if you don't need 100,000, take less. And we always coach people, please take the least amount that you need, because you just can't lose if you're using the money. The only way a seller can lose with us is if they take our money and they leave it in the bank as a cushion or whatever. It doesn't make sense. This is not a loan. You're paying us a percentage of profits. So use the money, get it working for you. So let's say now we give them $100,000. So now they have $200,000. And if they were earning 20% ROI in a month, I'm just going to use that as a simple number, they would have earned $20,000. Well, now with the $200,000, they'd be earning $40,000. Well, we represent 50% of that business, right, of the capital in that scenario. Yeah. They're 50%, we're 50%, 100,000, 100,000. So whatever our percentage of capital is, we get half that percentage in profits. So for that month, not for always, but just for that month. So in that month, we represent 50%, we get 25% of the profits, they get 75. So play that out. That means that instead of them with their money earning $20,000, they just earned $30,000 with no money out of pocket. So they just went from a 20% ROI to a 30% ROI with literally no risk. There's no personal guarantee or any of that. So yeah, we did well. But when they have a bad month, we don't do well. We only do well when they do well. So I'll give you a good example there. A few months ago with, the COVID situation and Amazon stopping, certain products from being sent in, we had some people that they were flying high and doing great. And all of a sudden, boom, it fell right off the table. They went from earning great profits to nothing, literally zero or less. What did we earn? Did we earn any interest? Did we get any payments? We got nothing. We earned nothing. We didn't accrue anything. Zero. So we took all the risk there. They didn't have any risk. They didn't have to make any monthly payments to us in those months anytime. But in those months, it really meant something to them. It changed their business. It changed their personal life as well. So that's the way we work. And we go off of not the revenue, but the net The net of the gross, if you will. So the revenue less all Amazon expenses, including advertising.
Gotcha. Just a quick note. I know I messed up on my numbers. So when I said 10,000 a month, I meant to say about $120,000 a year. So just because everybody will jump on me for messing up on my numbers. So anyways,
that's why I kept it really simple.
No. And we're going to go over a couple more scenarios because just in case anybody listened to what Don just said and you were maybe a little frazzled or didn't quite understand it, we're going to do it a couple more times with a couple more scenarios. And at some point I do, Don, want to talk a little more in depth about this and, how they qualify, what kind of size of companies, but I want to stick with the scenarios right now because so just so I understand, so let's say I'm going to buy $50,000 in inventory and I want you guys to match my $50,000 in inventory. Okay. So now basically we're 50-50 owners and $100,000 of inventory. Does that sound right so far?
Yeah. So yes. Yeah. Continue with that.
Yeah. So, okay. We go ahead and we order the items from the factory. Now I'm going to extend the scenario out a little more because I've ordered this $100,000. A lot of times it takes 30 days to make the item. It takes another 20 some days on the water to ship it over, to get it to FBA. Now what's happening? Let's just call it that 2-month time frame. In that 2-month time frame, I mean, obviously I have other products that are selling. So I'm not paying you yet, right? Is that right so far? Until that product gets in and starts selling.
Yeah. So actually, we are not investing in the product being manufactured. Okay. So once it gets into the Amazon ecosystem, that's when we view it as inventory.
Okay.
We have no control over it over there. We have no idea what it really is or isn't.
Yeah.
But once it gets into the Amazon ecosystem, and we are going to be adding some 3PLs to this as well. So, sellers can add it, put it in a 3PL. As long as we can verify that it's there, we can count it. But so what happens in situations like that, truthfully, Robbie, you have $50,000 that you have invested. You want some more money to buy more inventory. We might give you, let's say in this scenario, $30,000. Yeah. So now you can take that $30,000. So now there's an $80,000 total of inventory, right? So we always stay below 50%. We never go above 50%.
Gotcha.
So now there's $80,000 of inventory. We represent a small portion of it. You take that $30,000, you buy the additional inventory. It takes a month, it takes 6 weeks or 8 weeks to get into the Amazon ecosystem. Now we're giving you credit for that full amount. So now we have $30,000 in, but now there's, $80 or $100,000 of inventory in there that then counts. And we now represent a smaller percentage of the profits.
Yeah, I understand. Yeah. So I guess what I'm getting at and letting everybody know is you're also kind of floating it a little bit, right? Like the first couple months, or let's call it 8 weeks before it gets to FBA, I'm not making a payment on that $30,000 yet.
Right.
Not until it hits and gets into Amazon and actually is in there that I start making that payment. Now, let me ask.
No, you don't make any payment.
Oh, I'm sorry. Until I sell it is what I meant to say.
Yeah. So when you sell it, you still don't make a payment unless you want to, unless it's right for you and your business. All it means is that whatever percentage of profits that we earned, let's say we earned $1,000. Yeah. You could tell us to take that 1,000 or leave it in the business.
Gotcha.
And so most of the people, certainly now, people are going to say, leave it in the business. And that's a monthly decision that you make.
Gotcha. Yeah. Gotcha. So if let's say out of that 80,000, let's be more realistic. Let's say I make 20,000 profit on it. Okay. And I decide I want to take that 20,000, roll it back in with that probably 80 that I got back minus some fees and stuff. Let's just say after it's said and done, now it's about 100,000. I want to go back and order more now, 100,000. That 20,000 that you owned, let's say 30% of, does that just roll into that 100,000 that I went and reordered again? Yep. So I could keep reinvesting you, so to speak.
Yeah.
Gotcha.
Well, and here's the theory. Here's the reasoning behind it. I'm a real estate guy and a mortgage guy. I built major businesses in those industries and others. But if you had a good year in real estate, you're earning 5% for the year. Forget about leverage and all of that. Here, a lot of the Amazon sellers are doing really well. 10% a month, 20% a month, sometimes higher than that.
Oh yeah.
So, we're very happy to, get on your coattails, help you grow, help you earn more money every single time. And we're just tagging along. So we're very happy to leave our money in the game with you.
Yeah. Yeah. No, that makes sense.
Makes sense.
That makes sense. Yeah. Yeah. That's great. And I mean, you said that basically I don't pay you until I want to pay you. I can keep rolling you guys into the next inventory round. Now, again, let's break down even further. So when you guys invest, let's say I sell 5 products. Mm-hmm. And let's say I want to buy 2 of the products with, let's just use that $80,000 scenario again. I'm putting in 50, you're putting in 30. Now, are you just invested in those 2 products, or are you invested in my entire inventory at that point? Because that a lot of people want to know and understand, because maybe they have 3 products that are doing really well, but they're bringing 2 on. They're not bringing them on board, but they got 2 that are kind of up and coming. Yeah. And that's the ones they need help on. Let's distinguish that.
So we will only invest in products that are already profitable. Okay. So if they have 5 products and 2 are brand new, 3 are successful already, we're going to look at that and say, look, we'll invest in these 3 right now. You can use the money for the other 2 and help build that. But once those products are profitable for 3 months, then we'll include them. So gotcha. Until we include them, you earn 100% of the profit on that. And our system breaks it all out. So it's very easy to see it. So we don't take a penny. And also, just going back to the when we earn, we also don't take any profit, any percentage of profit in the first month. So we figure that when we invest the money with the seller, they're not going to get the most value and bang for their buck in 30 days. Yeah. But for 30 days, we bite the bullet, if you will. We don't earn anything. We don't accrue anything, nothing. And they get to, put it to work as quickly as possible.
Yeah. Yeah. So, I mean, let's be realistic. That could almost really be 3 months, because if I'm looking at 8 weeks to get it over there and you're giving me a free month, I mean, we're talking 2.5 to 3 months, of basically, I don't want to say free money because it's not free, but of not having to pay anything back. You're kind of letting me get going again. So let's jump in now, Don, with what size sellers are you guys looking for? If I'm, we talked about $10,000 a month and it can go up from there. Like, how low will you guys go? And then I'm sure you'll go as high as you guys want to, but let's talk about, how low of a seller and how long do they need to be selling to kind of be a potential client for you?
It's a great question, and it's a moving target for us, to be honest with you. We have $100 million to invest in Amazon sellers right now. So we need to get it out on the street. So, we in our model, we will go up to 5 million with an individual seller, but initially we're not looking to do that. Right now, I'd say our comfort level is, 40,000 to 250,000. We will go to 1 million. Right now, we probably wouldn't go over 1 million, but we'll actually go as low as $10,000. And I'm going to tell you the reasoning. When we sat down and talked about how, this model and came up with this idea, which seemed a little crazy at first, we started thinking about all the Amazon sellers, and we started talking to as many as we could. And what we found were there were a good amount, a high percentage that were very small. And I personally spoke to these guys and women. And I'll never forget this one woman I spoke to, and she had a very little amount of money, maybe, $4,000. She had $5,000 actually. And I said, well, what is your plan over the next year? And she said, well, I want to sell $1 million in product. And the following year, I want to earn $1 million in profit. And I'm thinking to myself, you're never going to get there with $5,000. So we made a conscious decision to go low, and we're down to $10,000. Just really, they're not going to be the biggest profit makers for us, but we want to give them an opportunity as well.
Yeah. So seller-wise, how long do you like to see somebody who's been selling? And you already said 10,000 is lowest you guys would go, but I guess I'm kind of asking, how established do they need to be?
Yeah. In our guides, we have a minimum of 6 months
Okay.
of selling FBA and being profitable. But I don't think we've even come close to that number. You know, most of the sellers that we are dealing with are in business for years.
Mm-hmm.
And, you know, some of them have already built businesses and sold them. And now they're back in for round two. You know, one guy, he's in for round three after selling multiple businesses, and he's
Wow.
looking to use exactly. He's got 2 brands that he's building right now, both very well, very, very profitable. He wants to use our money from those brands to start his next brands, which he's got 10 brands ready to go, and he's going to roll them out over a period of time, not a long period of time. And he did all the numbers. And this is a professional. He came back to us and showed us the numbers that he believes with these 10 brands he's going to roll out, he's going to be able to sell those businesses, and I don't remember if it was 2 to 3 years from now, all together as a group for $12 million roughly.
Yeah.
And never use his own money. He's going to be using our money the whole time. Pretty wild.
Yeah. Yeah, that's really good.
Yeah. And he's doing it more, I'm going to say, yeah, financially it makes sense, but he's doing it more, I think, to prove that he can do it.
Sure.
Yeah.
Why
It's exciting.
not, right?
It's fun to see.
Yeah.
And a great guy.
That is the upside of this business. There's also the downside of selling on Amazon, and it does happen even to established people. So what happens if they go under, or they are basically not able to make payments? They're struggling. Maybe their business is, let's face it. Before the pandemic, neck pillows sold great for certain companies that were in it early. But soon as the COVID hit, nobody's really traveling. So,
Right.
neck pillows, I'm just using it as an example because that's kind of a rough traveling. The travel industry or accessory business right now is not doing well. So if you guys were invested in a company like that, and all of a sudden they're struggling to sell their inventory and they either have to close up or liquidate, what happens at that point, Don? I know people hate to talk about it. It's the reality of business too.
We've run into it. And what we've done is we've sat down, virtually with the company owners and discussed it honestly and straightforwardly. It's a business. What can we do? And they know just as well as we do what they have to do. And in one case, this one seller, he was a little too bought into his product. So he didn't want to sell it. And so I sat down with him personally and I said, why are you not selling this? Even if you're going to sell it at a loss, you can then take your money and put it back into other products. So we built a little tool to show him, and we asked him some basic questions. If you sell this, what would you be able to sell it for? And what percentage of a loss? And so we had the cost, and his loss was going to be, I don't remember the number, it was a significant loss, like 40% loss. Okay, you're going to take that kind of a loss. What's your ROI on the rest of your business, excluding this? And whatever it was, and we plugged that all into a little, spreadsheet that we did. And it showed him that if he's able to sell that over, I think it was 3 months. So it wasn't too bad. He was dumping it. He was going to be able to recoup his money. If I remember correctly, it was 6 or 7 months. So if I've told you, you could get out of that product that's been holding you down for a period of time and reinvest it at a much better ROI in 7 months. And now how long would it take for you to start making money? You'd be making money instantly. Yeah. So he looked at it differently. Then he came back and he said, well, truthfully, I'm a little concerned that you guys are going to be, angry at me for taking a loss. And we said, from a business standpoint, it's the right business move. Yeah. So, there was another guy that we brought in, an outside consultant, to help move the product and help him through the rough period of time. And we're not always going to be able to do that, but we have not separated with anybody in a negative way at all. Yeah.
Now, Don, what about the scenario? Let's say you own 20% of somebody's inventory, and they're just going out of business. They can't re-loop back and find another product, and they're just kind of done. Do you, as part of the contract, that they have to pay you your 20% first? How, explain some of the details here on this, because these are important things. If people are going to get into this scenario, they need to know the ins and outs of it, the goods and the bads.
Yep. We take priority. It's the only way. We have really no lien on the products, but we're a partner in the business.
Sure.
We have no personal guarantee. So completely different from any lending situation. We are counting on you running a profitable business and that your inventory does well overall. And if you're trying to put all your money into one basket, we'd probably say we don't want to be in bed with you. It's just not the kind of business that we want to be in with. So I'm trying to remember, what was the question again, Robbie?
Oh, that's okay. Well, first of all, explain to everybody, I've been in business, I ran my business for 19 years and I understand what a personal guarantee is, but make sure everybody understands what a personal guarantee is. And then if they end up liquidating the company, let's even just say a scenario that they liquidate the company and they only come up with 10% of what's there to pay you, you have to take a loss at that point and just take the 10%, and then explain the personal guarantee, how that works by not having that there.
Yeah. So personal guarantee, again, I come from a lending background. So it's, we don't even say personal guarantee. We say PG, But, for a personal guarantee, anybody that has ever taken out a loan, you've signed in your documents a personal guarantee. And what that basically means is that if you don't pay that loan for whatever your reason, doesn't matter what your reason is, they're coming after you personally. So they can come and put a lien on your house. They can lien your income. A lot of lenders, what they do is they sell these bad loans to third-party collectors who then sit with these loans for years until you recover. And then all of a sudden, 5 years later, 10 years later, whatever the period of time is, all of a sudden you have nice income coming along. Maybe you bought a house. Wow, all of a sudden, they start garnishing your wages, and they're going to get their penny from you one way or another. And then all the fees and interest that accrue along the way. We don't do any of that. We are completely based on this business. So let me give you one more detail here that's very important that you are leading into. How do we protect ourselves? And really, it's a great question. And, if people don't ask me, I throw it out there just like this. How do you protect yourself? So what do we do? So here's what we do. Let's just say you have your own business right now. You have your own bank account, and Amazon puts money in your account every 2 weeks. We all know how it works. Now, what we do as part of our agreement is we open up a new bank account in the company name, in your company name, that you see everything, but we are the signers on the account. So you don't control the account. So we call it the control account. And the control account, all it does is hold capital, and it wires money out to the seller, to their current business account. We call it the discretionary account because maybe they're paying their car lease or whatever out of that. We don't care. Whatever they want to do, they do. That's their business. They tell us to wire money to a manufacturer, seller, supplier, whatever it might be. And they may tell us, hey, AccrueMe, it's February. I've got plenty of money in the bank. Take $10,000. Pay yourselves down. And we're happy to do it. But they determine who gets what, when, and how. So we have the control account. So now, in the scenario you're talking about, if they're really winding down the business, they're going to close the business. We've got priority. We see what's going on in the business, and then we have to have that conversation. Look, over the next few months, we're going to take ourselves down, and we're going to take whatever amount this month, and a little bit more next month, and then some more the next month, and then whatever's left is yours. So we are the priority at that point.
Excellent.
I think it's only fair. Yeah.
Yeah, absolutely. I mean, you guys are true partners in this. I mean, somebody succeeding or failing, your money's just as involved as theirs. So, percentage wise.
We're taking on more risk than they are. And
absolutely.
Certainly more risk than any bank would ever do.
Yeah, especially not owning equity in a business. That is what makes this so unique. And, there's the word I wanted to make sure I threw that in there. It is unique. It is. And, Don got a hold of me on LinkedIn and we were talking. I was looking at it and I was just like, what? I'm like, you guys aren't, I'm all, you sure you're not taking a percentage of the company? He's all, no, we're not taking a percentage of the company. It's all about the capital. It's all about the inventory and helping the company grow. And I mean, he's already gave great scenarios here. So Don, tell us a bit about how you guys backed. Who's backing you guys? How secure is it? Is there, you said $100 million, but I mean, I don't know if you can give out a name, but how are you guys, how's AccrueMe being backed right now?
Can I give you a quick story on it?
Absolutely.
I find it interesting. So here we are, we have this great idea. We, built models around it, and now it's time to go out and raise capital. And so we're going to go into our first hedge fund in Manhattan. And I'm out in front of the building with my partner. And before we walk in, I said to him, do you know what 242 is? Do you know what 242 is, Robbie?
I don't.
So 242 is the amount of meetings and pitches that Howard Schultz made for Starbucks before anybody invested in Starbucks, 242. So I said, let's just keep that in mind. We're not going in here to get money. We're going in here to show them this unique idea, give it to them. These are going to be much smarter people than we are. We may have finance backgrounds, but these are billionaires. They know stuff that we don't know. And they're going to do spreadsheets that we couldn't even imagine. Anyway, we went in there, we were expecting to get beat up and questions that we wouldn't have answers to, and some of them we didn't have answers to. We had to figure it out. And it went, it was probably going to be a 20-minute meeting that went for 2.5 hours. And then we had multiple meetings with them. And 6 weeks later, we had a term sheet for $100 million plus an investment in the company. I can't give you the name. They haven't authorized that.
I understand.
But, pretty wild. And then, we didn't have to go and see anybody else after that.
Yeah. Not after $100 million. You guys are good to go.
But, truthfully, we should be able to get this $100 million out. When you look at the model, it should fly out the door. I can't see a reason not to. There's some underlying fear with some people, like, I don't want you as my partner. I don't want you to look at my business. Okay, that's going to be a legitimate reason for some people. But if they really want to grow their business, you've been in business, you've sold your business, I have as well. If somebody came to me and said, I want to put money in your business to help you grow and not require monthly payments, and I don't want to own any of your business, I'd be a little blown away. I'd probably say, what's the catch? It sounds too good to be true. And maybe we made it a little too good to be true. And just to finish up on that, as recently, I'm just trying to think, today's one. So the end of last week, on another phone call with a big seller, and he said to us, why are you guys not taking just 1 point on the business, 1%? Everybody would do it. And we're like, it's just not what we wanted to do. He goes, do you realize what the valuation you could have as your business if you took 1% from every company? Nobody would turn you down. Said, it's just not our model. We want the seller to win. End of story. If the seller wins, we win.
Absolutely. Absolutely. Yeah. So tell everybody about how old is AccrueMe, and also go into, kind of your background. You touched on a little bit, but go more into your background, the kind of what brought you to this point of starting this company, and, actually start with the background and then bring us up to when it started, and then let everybody know, how long you guys been in business.
Sure. So I laugh when I think about it because I was retired for the last 5 years, and before getting into this, and I was very happy, and I had a pretty good golf game I was improving on, and my boating life was great. And then my current partner, an old friend of mine, I reached out and just said hello to, just said, I hope all is well. We hadn't talked in maybe 20 years. And we sat down and had lunch, and then we had lunch again and brainstormed different ideas, and we got on this and we brainstormed this. But to go into my background, so I'm still pissed off at him for taking me out of retirement. But the idea and the concept and the market is just too big and too exciting to walk away from, is really what happened. But Robbie, I've done everything from building my own mortgage companies, some of the largest in New York at the time, and sold them, built a publishing company, sold it, built a mortgage broker franchise and sold that. Started an entertainment company with, we did 8 feature-length films with all the biggest stars, from Tom Cruise and Natalie Portman and on and on and on.
Wow.
A Broadway show called Rock of Ages, which I think we ended up, I think it was, the show was fantastic. I think.
So wait, what was your involvement in that show?
I started the company that created and produced it. So,
Wow.
yeah, so a friend of mine, a producer, I was involved in another Broadway show. And when that was closing, he asked me to invest in a movie. And I said, you know, how about instead of me investing in a movie, I invest in you? And he said, what do you mean? I said, how about instead of me putting in a small amount of money, I put in a large amount of money. This way you get a salary. You never have to worry about, you know, putting food on your table or paying your rent. And we never ask anybody to invest in something that we wouldn't want them to invest in, which is a typical thing in Hollywood, you know, invest in this movie, blah, 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 blah. So he said, that would change my life. I said, let's change your life. So we did. And we got involved in these movies. And then we took on another partner who had created Rock of Ages. And, you know, it was dead at the time. And we resurrected it and brought it from LA to New York. And, you know, it turned into a big hit. So that was fun.
I gotta say thank you, because my daughter ended up doing Rock of Ages High School edition.
Really?
And yeah, so I had to bring that up because that was just hilarious that I didn't realize you had some involvement in that. So how funny is that? See, connected in a different ways, for sure.
It was certainly a great show. And, you know, well, nothing's running right now, but we had it off Broadway recently.
Sure.
So, you know, that I got involved in doing fix and flips. So I did, in 18 months, I did 300 fix and flips.
Wow.
I made money on every one of them. I just didn't enjoy it. It wasn't a fun business to me. So, you know, I didn't want to do anything that's not fun. So I've done a whole bunch of things. You know, I've touched on so many industries that I keep wondering, why do I keep bouncing around? But truthfully, my friends, my personal friends, go back to my first company, and literally every company that I've worked in or owned, I am still close friends with the vast majority of them. You know,
awesome.
It's just fantastic. It's a good life.
So why the pivot into the Amazon world then?
So we sit down, my old friend from the mortgage industry, Eric, and we sit down and we start talking and brainstorming different ideas. And he really was brainstorming, and I was giving my input on different things. And we started talking about Amazon. That intrigued me. Like Amazon in itself, wow, you know, getting a business involved in Amazon, I knew nothing about third parties or anything involved in Amazon. I didn't realize the ecosystem that was here. It's mind-blowing to me. So I started learning, and then what I did was I called my accountant. He put me in touch with some sellers, so I was able to talk to them and get their insights on things and what their needs were. And they all had the same answers, and they, you know, had big dreams and, you know, not a lot of money, you know, for their dream, if you will.
Yeah.
So we come from financing background, so we started looking at the lending options, and I ran some spreadsheets and did some analysis on it. I didn't like what I saw. You know, I felt that the lenders were going to make a lot of money, but I didn't think that the sellers were going to do too well in those situations. The sellers would have to really get a great ROI to do well.
Yeah.
And I felt the seller was taking on too much risk. So then my partner, I'll never forget, we were sitting at the Penn Club. He's a Wharton grad, and we're sitting at the Penn Club in Manhattan, and he said to me, well, why don't we partner with the sellers? I said, what are you talking about? He goes, well, why don't we partner with them and, you know, change the whole thing up? So I said, well, how would that work? He said, I have no idea, but let's talk it out. And we just started brainstorming for hours and then days. And we came up with this unique solution, and we tweaked it multiple times. And I think we're in a good spot right now.
That's great.
So that's only maybe 18 months ago.
Okay.
Yeah. So this is, we're new. We literally closed on the money just a few months ago, right as COVID was hitting. Which hurt us because we weren't able to get out to all the trade shows and really, you know, make a splash. But now we're trying to, you know, through people like yourself, and I really appreciate you doing this, you know, get the word out. Because again, I don't see how anybody turns this down.
Yeah, for sure. I mean, it's great. It's great way to increase your inventory, get money, get a backer to can help you, you know, your company grow, which is what everybody needs. So again, it's AccrueMe, AccrueMe.com, AccrueMe. Talking with Don. He's the co-founder of AccrueMe. And Don, thanks for being on the Econ Wiz podcast. I really appreciate it. And since you're still kind of new, we're going to definitely get you on maybe in about 6 or 8 months. I want to do like a follow-up with you and see how you're doing. But just real quick before we go, about how many have you invested with so far, like companies or people?
Not a ton just yet. Say a couple dozen right now.
Okay. So that's good. That means there's still lots of that money left for you guys. So make sure to go out to accrueme.com or hit up Don on his LinkedIn. I think it's, why don't you tell them how they get a hold of you there?
Sure. On LinkedIn, it's my full name, like my mother would call me, Donald Henig, and you'll find me very easily. And or even if you just wanted to email me, it's just Don, D-O-N, at accrueme.com. Nice and simple.
There you go. It's
Happy
really simple. Yeah, or just go to the accrueme.com site. I'm sure there's a way to contact them through there.
Oh yeah.
And again, that great having you on. Thank you so much for providing all this great information. Be sure to go check out his website, guys.
Please subscribe to our YouTube channel, and for more information, please visit feedbackwiz.com.